All right, so real quick, we're just gonna go over this high probability setups. We're gonna do this kind of fast just to make sure we're not crazy and get a lot done in a short amount of time. So we're only focusing on when we take out a daily high or a daily low. Those are the only times that we're looking to take a trade. That's really it, a daily high or a daily low. I mean, what other high probability setup is there? I mean, there's a couple more, but look at how consistent this one is. So we take out a daily high over here on ES. We take out a daily high over here on NASDAQ as well. So let's just go ahead and label this real quick. Daily high. So daily high, daily high. Alright, so then as soon as that happens, then we go in and we look for something very specific. We go down to the 5 or 15 minute. So let's adjust this line because now on a lower time frame, the daily high, let's just get it exactly where the daily high was made, which was the day started right here in Asia. This is the daily low. This is the previous day's daily low too, but we didn't take the daily low out, so we had nothing to look for bias necessarily. But right here is the daily high made for the day. Then this is Thursday. So Thursday opens up right here. This is where it closed on Thursday. Friday opens up right here, I meant. Wait. Well, this is the Friday candle, you see, but it's Thursday still because it's 6 p.m. the Asia session. So let's say Thursday's high is right here. All right, that's the high of the day. All right, then its Asia range session starts at 6 o'clock. Asia comes in and it takes out that high, does it not? And when it takes out that high, we look for a order block that is paired with a fair value gap with a 5-minute break of structure. So this one, I'm not gonna lie, this one doesn't necessarily, I don't know if this one is the cleanest, but we took out the daily high, right? The order block is right here. This fair value gap is right here. This is just the first one of that day. It's not necessarily the highest, the cleanest. We could skip this one. But just to show you, we have an order block with the fair value gap. To be real, I like when the fair value gap touches the order block. I think that's better. But so put the stop loss here. We only want to risk a certain amount, so we want to risk about $500 would be nice. And you know, a way that we could gauge this just to see is if you hold shift click, or you just click on the measuring tool over here from this order block, because that's where we're entering, right on that order block, and then our stop loss is going to be this low. That's a 4.5 point move. And right here I've made a cheat sheet, even though I can do the math in my head. So hopefully that wasn't too loud of a noise. So every single ES, since this is ES that we're looking at, the SP500, every single ES move is worth $5 a point. So that means every point is going to be risking $5 for one contract. So this is 4.5. So let's round that up to 5. So 5 times 5 is 5, 10, 15, 20, 25. About 25. So one contract should be about 25 points. $25 is what we're going to be risking. So we put that right there to test to see if what I just said was true. And it's 4.5, so it's not exactly 5. So that's about $22 is what we're risking. Because every single point is worth 5. I don't even know what I just said, but I'm pretty sure I said what was right. So then we put the 1-to-1. All we're going for is the 1-to-1, even if we could get more out of it. Because we were realizing even though 3-to-1s and 2-to-1s are a thing, and you would think because if you're right, you're going to make back what you lost. But no, you're actually just going to make more 1-to-1s if you know how to select them to make them high probability setups, which is just swept the daily high, has an order block. So boom, what do? We tap in and we hit a 1-to-1. Solid. So look, we changed the risk because we want to risk about $500. So how many contracts do we need to do to make it $500 now? That's how you do the math. So if it's a 5-point move, you got to do about, and every single move is worth $5. How many contracts to make that 500? 5 points equals 5 times 5 now, which is 25, and then 25 times 20 is about $500. So $25 risk, risking about 20 contracts. So that should be the math about here. So 20 contracts is 450 for this exact move because it's 4.5. So this is not 5 points. I'll have this by 5, 10, 15, 20, all the way down to 60. All right, anywho, so we're going to do a class on that. We're going to skip past that for now. That was just a quick class. We got to risk about 23 contracts to make about $517. Confirm. All right, boom, we hit this. And then within that 5-minute candle, not even 10, 20 minutes later, just within the next 5 minutes, we come down and we instantly make the 517. Now we could go into a lower time frame to show you. We're not going to do that every single time. But for this one, just for this first one, we're going to show you. We enter right here at 10 o'clock. That's when we enter. That's when the risk is on. We only deal with about $86 of withdrawal. And then so we enter at 10 o'clock and we get out of this move by 10:04. So we're only in this for 4 minutes, making $517 in 4 minutes, and we know it's going to be a high probability setup for a 1-to-1 only. Look, we're leaving so much more money on the table, but we just want it to be consistent every single time. So now that just freshly took out the daily high. So when that freshly takes out a daily high, that is the best time to do it. It's not about New York session, London session, Asia session. It's about when does that high actually get taken out. That's what's more important to me. All right, and then why wouldn't we take this 5-minute breaker structure for a 1-to-1 in this order block? Because that's not the highest high. So since we took out the daily high, which was the highest high, then we put in a new highest high for where we're at right now. So this is a new day, we took that out. And then until we take this high out, and only when we take this high out, because now all the liquidity is over this high. All right, so now we took out this high. Then we look for a 5-minute breaker structure in an order block. And what do we got right here? From this order block right here to this low right there. So we broke the structure right here. We have a fair value gap. This is the main thing I think that I like to see, is if the fair value gap is in somewhat touching the order block. So to see how this fair value gap is touching that order block, that top order block is where you do it, because that's where the order block series starts. That black candle kind of breaks off. This is a 5-minute. So we put the stop loss right here at the low. We put the entry right at the order block. And then we put the take profit at a 1-to-1. And then I'm not going to do all the math. I'm just going to change the contract size because we have enough time to enter on the 5-minute to just figure it out. So we got breathing room to do this right now. We're not rushing. All right, so we need to risk about 29 contracts. Boom. So even though this whole range, Fibonacci and all this stuff, I mean, this is in deep Fibonacci retracement. And this is below the 79. It's where the order block starts. Yo, even though we have all this range, we don't have to take it to the external range. We just want a 1-to-1. So we hit the 1-to-1, we hit it right in here, and then within the next 5-10 minutes, what does it do? Within that same candle, it wicks it, and then it hits the TP. So then if not that candle, it's either from 325 we entered, we're definitely up by 330. That's a 5-minute move, another 5 minutes, another $500. All right, now we don't focus on anything else until this high is taken out. So then we come over here, we take this high out, then we get a 5-minute break of structure kind of. Nope. I mean, this barely breaks 5-minute break of structure, but here's the thing. That doesn't break this low, and neither does this have a fair value gap in it. So that is not a move we would take. Now this sweeps the high that swept the high that swept the daily high. So every fresh brand new high. So now we got a fresh brand new high. New York session's about to start. What do we have right here? We have an order block. I'm not trying to sound like a smart ass. I watched this dude who made a smart ass video the other day, this Canadian guy, but honestly, the way that he said it, it was like, wow, it can be this simple. So we have an order block that is touching a fair value gap in a 5-minute breaker structure, and it's a high that swept a daily high that swept a daily high. So it's a fresh high. It's not in the middle of the range. This is the highest high that is in price right now. So we put this right here, and we go for a 1-to-1. That's all we go for. And then we change the contract size so it matches our risk, which is $503, around $500. Boom. So we enter this one at 6:15, and then we get out at 7:15. Because see, we enter right here. We deal with all this consolidation. We don't deal with much withdrawal. We only deal with about negative 130 to about negative 97 of withdrawal. And then we come up. We don't even get close to our stop loss. Then we come up and we hit this at an hour later. But it's a high probability move. So some of it 5 minutes, 10 minutes, some of it's an hour hold, all right? But it's high probability, and you know exactly what you're looking for. And then why wouldn't we take any of these 5-minute breaker structures right here or anything over here in the New York session? Because this is not the highest high. This is the highest high. So until we break this highest high, do we look for shorts? Now looky over here. We break the highest high right here. Boom. Now we wait for a breaker structure. All right, well, we get this smidge of a breaker structure right here. Look at how this one barely closes past that right here. But it closes, and what is there? There is a fair value gap right here. And it's only touching the wick of this order block. So honestly, this one is not meet my criteria. I would like the order block right here to be submerged by a fair value gap. But I don't see that. But there is an order block. There's a fair value gap on this big long candle, and it is parallel with this. So you know what? Let's just say we were to hit sell. This move I don't really like. And this move also didn't finish because it's on a Friday too. That's the thing. So we could risk a 1-to-1 for this, right? Change the contract size. It's, market's about to close PM session. And well, I thought this one didn't work out. All right, as soon as this closes right here, boom. I guess this one does work out. So we enter right here. Either one of these two candles is gonna hit it. So it gives us like 10 minutes to get ready to enter. We have our stop loss up there. We're risking 6 contracts. Boom. We get in at, as soon as this one closes, we have a fair value gap right here. So we have an order block paired with the fair value gap. It doesn't come up and hit this order block where the fair value gap is touching. So I don't know if I'd really take this move, but it does look pretty decent, and it did just take out the high that just took out the high that just took out the high. So the order block 532, regardless if it's a super A plus perfectionist move, it does a 1-to-1 instantly, high probability. What is that? We get in at 405 and we get out 455, 5 minutes before the market closes. So now we've seen 1, 2, 3. So wait, 1, 2, 3, 4 trades that are all about $500. So we've just made $2,000 since last night. So from Asia session from 6 o'clock Thursday, we have made $2,000 from 6 o'clock Thursday to Friday 4 o'clock, right before the market closes. And all of these were just because they were daily high getting swept. As soon as the daily high got swept, boom, that's what we were looking for. So look, now, and now let's check that same thing on NASDAQ. Daily high swept. I mean, do we really got to check the same move? I mean, let's just check on NASDAQ. So we took out the same high. because these are basically the same charts doing the same things. But I am going to show you one thing, and then we're going to keep on going, and then we're only going to switch between them when we're not sure about the setup. We're going to see which one provides the cleanest setup. Honestly, I like this one on NASDAQ better because look, it takes out this high. It has this fair value gap, and this fair value gap is in some way and form encapsulating, if that's even a word, this order block right here. So this order block is within this fair value gap range. We do the same thing. Opening price is the entry. Stop loss is that highest high right there because this is the highest high at the time. And then target a 1-to-1. This is mirroring exactly what I just showed you because these charts are so correlated. It's like, why would I even come over here and check? It's probably doing the same thing. All right, boom, 1-to-1. We enter within 5 minutes. 7:25, 7:30. We're out the move. All right, that's 5 minutes. Another 5. All right. All right, piece of cake. Then we take out that high. Once we take out this high, and then only until we take out that high, can we consider making another move. We take out the high. We don't have any 5-minute breaker structure to the fair value gap until right here. So look, we got a fair value gap, a skinny schminny one right here. It's touching this order block. So ideally, I would like to enter on this order block, I'm pretty sure. Now it starts right here though. And that's like about a smidge ridge away too. That's this small order block on top. So let's just see if we enter right there if it works. And then let's put the stop loss at this highest high, even though I kind of want to put it right there. But let's just put it right there. Let's change this contract size. All right, I'm trying to risk around 5 to make 5. A 1-to-1. I know a 1-to-1 doesn't seem sexy, but are you broke right now? Let's keep it real. Are you actually doing anything, or are you not getting anywhere? And you're just keep on going. All right, so we couldn't get right at 500, about 429, or we could risk 643. So do you want to risk $143 over what you want to make, or do you want to risk $70 less than what you want to make? I'd rather risk $70 less than what I want to make. So that way, if I'm wrong, it's still a decent amount. And do we get a 1-to-1 on this? It looks like this one doesn't work out. And you know what? That happens sometimes. It did work out on ES though. That's the thing. On ES it worked out. And this is the same exact move. So that's why sometimes it's nicer. And then let's go back and let's look at it on ES, because at the same time this move did work out on ES. And does the structure look any cleaner? I mean, on ES, that move worked out clean as hell. And you know, I like the thing about the one right here in ES is this order block series is just 1, 2, 3 order blocks, and then it hits it. So that's such a small order block. Versus over here, I mean, unless I just got it zoomed in or something, like that's 1, 2, 3, 1, 2, 3, 4 order blocks. So honestly, I think that it's better to take this move over here. You get the breaker structure right here at 935. So by 935, you already got the breaker structure. You don't even got the breaker structure until $950, $945. So you enter this breaker structure happens way earlier, has this fair value gap right here. That's a big fair value gap. And it's not merged with this order block, but this volume gap is. But like I said, this move didn't look that sophisticated, and it didn't meet my criteria right here. And even right here, I want the fair value gap to be bigger, and I want it to be hitting this order block. And so really I don't like this move, but it worked out on ES fortunately. And let's say we entered at the fair value gap that's actually in the order block, because I'm kind of trying to put that together to see if that makes any difference, because that fair value gap is paired with that order block. So since we'll enter off of right here now, and then we'll put the stop loss. Will it work at the highest high? 391. Let's see. Nope, it won't. So like I said, this one did not work out smoothly. But then we put the stop loss right here, right? Because for some reason I feel like this is a swing high and a swing low, and I feel like this is just a volume wick. Well, so if I felt like that and I wanted to do that as my stop loss, and only if I wanted to do that as my stop loss, and most of the time it doesn't get that close to the stop loss. So if we would have put the low right there, knowing that we didn't want to do all this volume, because that just looks like a bunch of extra volume came in, this would have worked out. We would have got in at 9:55 and we would have got out at 10:35, and we just got to risk 3 contracts. So regardless, that's better managing. That just comes with being subjective. Why wouldn't you put it at the highest high? Well, the highest high, we wouldn't have made it. We would have made it so close right there. Only in this case, how do you know if it's going to happen or not? You don't know. All right, this got really close, and then it said, haha, we swept enough liquidity, and then turned around. Now, when you see it break structure on the 5-minute, like when you see it break all of these highs right here, and then it has a fair value gap right here, you can kind of tell maybe this move isn't going to work out, and we inversed these fair value gaps. So you have the option when you see it get so close, unless you just took that 1-to-1 like that, which would have been smooth. If not, you see all of this and then you see it get close to that price, you know what you could do? You better watch your butt. It made it so close, put it at break even. Now you didn't lose any money, at least. You almost made money, but then it turned around and you didn't lose any money still. And honestly, you could take a couple contracts off too on the way down, just to be like, whatever, I'm going to get out at break even and take a couple bones off. So that move could have worked out, but it didn't. Or it depends on how you manage it. As long as you manage everything properly, then we take out that high. Same thing that we just looked at on ES. This is basically the same exact moves. You got an order block. Boom. Right here. We just took out a fresh high once again. We got an order block, and we got a fair value gap right here. It's actually right here. And it is touching the body right here. So with it touching the body right there, that means that this fair value gap is green. This order block is green because of that fair value gap. Put the stop 1-to-1, 165. Not every move is going to work out, and not every single move is going to work out. Right now we're trying to see how many of these work out, because based off of it sweeping a high and then only sweeping the high that swept the high and only the highest high, it seems like this works out basically every time, if not almost, and you have the chance to make sure you don't lose any money still. That's the thing. So look, 1-to-1, when do we enter this price? So it actually displaces super far out of this range. That is so far. Look how deep this is in OTE. This is way past 79. So you don't got to target the external range. You entered in at that order block, which that order block got met at 4 o'clock on the 5-minute. And then within that same candle, so it opened right here, wicked that, and then it closed down here. So within that 5 minutes, boom, you got a 1-to-1, 495, another 5, basically within less than 5 minutes. Then we take out that high. Once again, we don't take anything else until we take out this high again, because this is the high that took out the high that took out a daily high down here. The main thing is the daily high. You already had like so many opportunities. It's the middle of the night. Now we wake up, New York session. Forget waking up at 9:30. We're waking our ass up at 6:40 again, and we're getting ready by 7 o'clock. Because look at this. This move enters, the first entry is at 6:45. So really wake your ass up when the sun rises at 5. That's really all you got to do. If you want to make sure you can catch them all. I mean, you really only got to catch 1 or 2 a week, Buster. And look how clean this one is, though. That's what I like about this one going into the New York session, is that this has a clean fair value gap right here. Touching this order block, we hit that order block right there at the opening price. We got the stop loss up there. Now this is an ideal clean setup, and you can just wait for these clean setups, yo. You don't have to take any of the other ones before, because this is the ideal setup. This is around what time you wake up. Fortunately, this is what time. It's not really about the time, it's about when does that high get taken out. If that daily high didn't get taken out yet, we still would not be doing anything. But there would be probably chances to enter a trade, Fibonacci retracements, 5-minute zones that are respected. But I mean, let's keep it real here. We want this to basically work every time, and we don't want to be losing money. So what do? We enter at 6:25. Unless we didn't wake up until 7 o'clock, then we're still in this zone. By 7:10 you could enter. It doesn't matter, you could just buy right there and put the stop loss there. Either way, this move gets out. The first entry is at, if we're just up already before around 5, which is when the sun comes up, so we probably would be up. 6:25 we enter, and then definitely by 7:40, so about an hour, but it's high probability. And then we get another 5-minute breaker structure in an order block or breaker block, whatever this is. But we're not going to take this high, because this high is not the highest high that took out the highest high that took out the highest high that took out the daily high. The first one is the daily high. Then you look for a move. Then you look at the one that took out the high of that took out the daily high. Then you wait for that high to get taken out. Then you look for another short. Then you wait for this high to get taken out. Then you wait for another short. So until this high takes out this one, you do not take a short. So the reason that we could short, I would say, this NASDAQ one is because this took out this high. But look over here. This is the SMT divergence. This high did not take out that high. So when this high took out this high, that took out the high, that took out the high, that took out the high, that's in the PM session. Then that's why we could enter this order block. But we had an SMT divergence. So since this high is the highest high, this high was not the highest high. So you cannot enter this same move on ES right now, because we have an SMT divergence. So since this SMT divergence, this means that this 5-minute breaker structure is not safe for a 1-to-1. Even though it looks like it wasn't safe, you would have took an L, because that's not the highest high. So you wouldn't even deal with it, yo. This one right here is the highest high. What does it do? You put your stop loss here. You take profit down. You enter right on the order block that's in the fair value gap at the first series. So the first order block is right here. We came up, boom, we hit that price. Let's change our risk to reward. And this has been offered on NASDAQ. This has been offered on ES, so whichever one looks cleaner. This is one contract now that we can risk for a 1-to-1. This is the one. So this one actually played out. This high took out the high in this PM session. This PM session did not play all the way out because the market closed. So if you would have took this in if you would have took this PM move, you would have been better off. But this one makes it to about, it closes at 375. So you can either just take a negative 1-to-1 risk to reward, or you could hold on to it until Sunday opens at 6 o'clock. And that's a bigger gamble. Like, do you really want to have a move like the whole weekend just like frozen that you can't close when the market closes? So if it doesn't hit it, by the time, I would just close it at the last minute of the day and take what you can get. If it's not a loss, bet. Who cares? If you know I'm losing money, who really cares? And it's still a little 3 in your pocket. Or you could wait till it opens up and boom, hits it. And also, or you could just move your stop loss to break even. So even if it doesn't go straight to it on if you want to get your full amount, get your full amount. but don't lose any money when the market's about to close and you can't have any control of your position. So we can move this at break even, or we can move it under this low at a negative 142. So we're going to make $142 regardless. So we don't know if it's going to open and go straight to our take profit, or if it's going to stop us out with a little bit of profit, or we could put it at break even just so we can make sure that we either get all or nothing right here. It's how you manage it. It's way easier to manage on the 5 minute, and it's way higher probability if you wait for a daily high or a daily low to get taken out. All right, so this is that daily high, and it provided like 3 or 4 moves. It was a very high probability setup, and I think that this video is long enough to maybe start another one. So now we are going to go through the rest of these videos faster. So this was part 1. This is probably a long video, so we're going to go through everything faster. We're going to stop this video here though. So this is just the last day. All right, Friday going in, Friday sweep and Thursday high.